Okay, hello traders, and good morning. Today is Tuesday, March 5th, and I'm Michael Boutros, currency strategist, here for this live intraday strategy webinar on SB Trade Desk. Guys, great to be with you. Iman says, welcome back. Hope all is okay with you. Iman, great to see you again. Kamal, Mark, Nilesh, Pete, Ty, Ziad, great to see you guys in the room. By the way, Ty, I saw your tweet yesterday. The homepage is always updated, guys, with the webinar schedule. So if it's not on the schedule, then it's probably not slated for that day. So a quick reminder. Great to be with you guys this morning. Lots to discuss. So we did see a stretch higher into the close of last week with that dollar rally. It's pushing, or continuing to push higher today or in this week, but we are still coming at some areas of interest here where we don't want to get too involved on it. To start off the week, basically, you have the dollar strong against all its major counterparts. Biggest loser so far is basically sterling's down 0.6% just today. And I love the sterling on where it's pulling back from. Certainly the broader picture there is still constructive, but we're coming off big resistance. So levels of interest, we'll go over DXY, Kiwi, CAD from last night, gold, SPX with a nice rebound with an outside reversal off resistance. Go over Euro, Aussie, and then the outside update there on sterling. Any other questions or trade setups you guys want to review? As always, feel free to throw them on the message board at any time. Okay, let's jump right in. So here's what we were looking at last night. Now, before we jump into the crosses, I do want to just go over the DXY. You guys have all seen this chart. Pete says dollar, yen, and oil. Ooh, oil for sure. This is for Pete. I got you. Dollar, yen, JPY for Pete. Gotcha. I have no clue what's going on with dollar yen, but I'll show you the levels that I'm looking at for sure. And Ty wants to take a look at euro yen. Gotcha, Ty. JPY for Ty. All right. So you guys have all seen this chart before. Here's the weekly DXY chart that we're looking at. I just want to bring your attention to this year's high week close, which was in February, is 96.92. And if we look at this on the weekly chart, that level converges basically on the slope resistance extending off the 2017 high. Okay, that's a 3-point touch. So that's twice back again in the high that you made in December of last year. Again, right, in February, converges right there. So just levels to watch on the broader picture this week for this DXY rally. Okay, big region there to look at on the weekly chart. Daily chart looks like this. Again, 96.92 is the high day close. Okay, and again, you have some upslope here for the channel that we were following from last year's lows. Support. Let me offer some resistance in this region. Okay, keep in mind also, guys, that we are on the back essentially of a 5-day, 6-day stretch to the upside. Okay, if we continue today, would be the completion of a 5-day stretch higher. A look back, it's not actually that rare. So I was looking at this earlier for how many times we've seen consecutive advances of this magnitude. The one that happened just earlier this year, last month, right? You saw that, what was that, the 6-day, 7-day advance, 8-day advance, just saw 1-day interruption, and it continued to new highs for the next 3 days before turning. So I don't want the fact that this is a 5-day stretch now to necessarily make us bearish, but we are heading into structural and just basic Fibonacci resistance. Okay, so a level to watch for possible resistance here on the DXY. Here's what it looks like on the intraday charts. Hey, Kieran, great to see you. It says, hello, MB and all. Great to see you in the room. Here's what the intraday chart looks like for DXY. Again, that 618, 96.78. You see that we're kind of tempting a push higher here today. Look, I can't, advocate for any fresh, new long dollar exposure. If you're holding long dollar exposure, a good area to take a little off the table, bring your stops to break even, protective or better. Because if it's going to turn or if it's going to give us some sort of downside pivot, it would be off this slope. Again, there's that same slope we looked at in the daily chart. The reason I leave it on there is because when you look at it on the intraday, there's actually quite a lot of play off that gradient. right? Resistance, resistance, resistance is the exact opening range highs for the week. It's exactly what we're testing now. So look for reaction here. If we open up the US trade session and we close higher on an hourly close, probably going to be the extension up into 97.20. With what the momentum picture is doing right now, from my standpoint, I'm not holding any long dollar exposures. For me, I'm on the lookout for possible exhaustion. Okay, and something again I was looking at ahead of the webinar here today, guys, is this is making an outside reversal candle higher into resistance. So if we're going to hallmark some sort of exhaustion trade, these are the kind of things that you start to look for, right? Typically, you want to see acceleration, you want to see follow through on something like that. If it fails here into the US trade session, maybe a choke point near term. Okay, interim support, 96.60 is the soft support. Weekly opens 96.37. You're constructive above this for now. That would be also your mark to shift the focus lower. All things held constant, basically at resistance right now. Hey, Jay, great to see you, sir. Good morning. So tempting a decent slope pivot here in the DXY to start off the week, right? Obviously, the China trade talks, you're seeing headlines of that circulate over the last couple of days on whether that progresses or not. Whether that what that means for price, guys, whatever. We're looking at what price action is doing, and right now, this recovery in the dollar is testing near-term resistance. Okay, so that is DXY number one. Let me jump into last night's update and take a look at Kiwi dollar. We'll start things off right there. So for Kiwi, what I wanted to highlight is how this thing has been reacting. First of all, Aussie, we'll go over that update a little bit later in the session. We broke below, upslope support. We broke below bullish inval. The thing turned completely bearish. Kiwi, right? Whoops. Ran into resistance last week at the median line. And we highlighted that pullback looking for a drop towards the lower parallel. Here's what the update looked like previously. We came off the median line. We were right there at that 25% line. We covered the gap. It broke lower, an objective break of the weekly opening range. We said if this thing is indeed heading lower, we basically want to look for a drop towards those levels, basically into the 67 handle, right? At 67, or excuse me, 68 handle. 68.13 was a target, and 67.90. That's basically where we found ourselves opening the week, right? And last night's update, we said, well, the weekly opening range is setting up right above confluence support. Again, 67.90 into the lower parallel, and both of those converged not only on the opening range lows for the week, but last week's low, right? We're testing that support right now. Here's what the daily chart looks like. Basic look at this, again, just a basic 618 retracement of last month's advance. We're sitting there right now. Just want to show you this confluence region down here of longer term moving averages. You're looking at the 100-day and 200-day into 67.50. The longer scope, this thing is still in consolidation after last year's low. And again, the weekly charts on this are pretty clear as well, as far as the fact that since the start of the year, guys, this thing has just set a very clean and objective 2019 opening range, well defined. And now the yearly opening range converges on basic slope support from last year's low. That highlights even more so that 67 handle. 69.30, we talked about that being key resistance. The 200-week moving average now converges on that same 50% retracement, just right around the opening range highs for the year. And again, that's 69.30. So on an objective approach for Kiwi, guys, the longer term picture on the weekly scope, we really need to just focus on this 230 pip range. It's all about this break, okay? So keep that in mind on anything that you take for a near term picture here in Kiwi. Again, the daily chart gives a little bit bigger of a consolidation type of depiction of what price action is doing since the start of the year. Near term is where the good stuff is. All right, and here's what it looked like. So actually last night, we were testing the weekly open resistance, 68.25. That was near-term resistance. Talked about bearish invalidation at 68.48. That was the exact high. It was actually a nice opportunity last night to get back in the short side. There's the break lower. If you did take that trade and you took off that position or you closed most of it here, it's exactly how I would have played it. Yep, I'm with you on that one. Um, you know, I was flying in last night, so unfortunately I didn't get into this one. But listen, if we did, let me take this. If you have a little bit left on the table, yeah, I would go break even on the left. The next downside level for me, guys, if this breaks or you see follow through in US trade session, it's the 100-day moving average, 67.65. That's the guesstimated or just the average. I want to say average, estimated 100-day moving average right here. And then the 200 converges on the median line. I was a little bit apprehensive yesterday and getting too aggressive on this downslope pitchfork that we added. But man, last night, we just rebounded again off the 75%. This is the 618 line, if I'm not mistaken. Yeah, 618% line of that pitchfork was resistance. Well, first of all, the break below saw acceleration, was resistance, looked kind of hairy at last night, but you didn't really get a close anywhere near it. Or actually, you closed right at it. Let me take that back before pulling back. So far, so good. The pitchfork looks decent. And if we break below 67.90, the next downside target, even if you just go to the median line, kind of converges on that 200-day. So I like the levels. I think Kiwi's a decent play here. If you're not already short, don't go jumping into a short from here, obviously. If we get a decent recovery, look for failure at that 618 line. Stops need to be against the opening range highs for the week. And at the next downside break, you're looking for 67, 66, 65. Soft target that 100. That 200, the median line is kind of the big player for me. At this point, you have to just kind of make a little adjustment to that new low. Again, this is kind of just drawing straws now. If it breaks above that parallel, sit tight, but we're still going to drop near-term bearish invalidation just to 68.46, couple pips there. The slope, last Friday's high, the 50%. If you get through that, we're probably looking for a resumption of the broader uptrend. All things held constant, looking to see if we can't get this break of support in Kiwi. Any questions on New Zealand dollar? Okay, that is number 2 from last night's update. Testing support right here. Let's see how we look in US trade session. Would you take it? You know what? Someone's asking if I would take a long here. This is what I would say. The way I would attack the long is actually if the US trade session opens up, we hold that low. If we probe through this high and pull back, the long would need to be against that swing low you made in Asia. But I would be, half leverage on that. I would take a little off at the median line, go break even on the rest. If we do vault through, again, 68.25 shave off some and then the upper parallel. I don't want to target up here. Anything that you would play on the long side, even for scalp, would just be towards that 618 line for now. And then you would go break even, see if you get the extension. I'd rather be looking for that rally to kind of look for new entries if you're not in this short. So let's just say that. The other thing I want to say, guys, is I'm treating this low 67.90 as now the weekly opening range, right? It's Tuesday. You made a Monday, Tuesday stretch. The opening range is taking shape above confluence and Fibonacci support. So you have both slope and lateral support. And again, look to the left, guys. This is something I always do. Look to the left in price. Just a basic pivot in price. Swing low, accelerated rally. Swing high, accelerated rally. Swing high, right? All these pivots along this level further validate that if it breaks to the downside, we should be looking for an accelerated move. So you can try to tempt on the long side for a little bit of a scalp, if you will, but man, you need to be like half leverage, real nimble. I'd rather be looking for a rally to sell. Make sense? All right, that is Kiwi dollar from last night. Also, last night was Loonie. Here's what dollar CAD looks like. Quick update on this one. So if you look at the previous update, which again is always provided for you there, here's what we were looking at with dollar CAD, right? We had come into monthly open support. We saw a nice rebound there. We talked about the fact that this has essentially made a reversal candle off the low there. And basically, if we were to break this downside channel, we'd have to look for a larger recovery. Okay, that's exactly what happened. Here's dollar CAD last night. Descending channel broke into the close of the week. Seems every time I travel, it's like every time I get on a plane, the second I get off, I check rates. And so some sort of sizable move that I just missed. But there was the breakout to the upside. It failed right at the median line, pulled back. And again, 3340 is not only an 88.6 retracement, which I typically don't really want to stress that, but it's the objective range highs that we made for that February stretch, right? So a level of resistance that we're looking at to start off the week right here at dollar CAD into resistance. It's still pressing the highs, okay? We're still pressing the high right now, but I'm still thinking the same thing that I thought last night, which is if you're holding longs, this is where you want to wrap up a little bit, right? Expect some sort of corrective pullback for a scalper or really near term. Yeah, I'm kind of looking for near term exhaustion. The pullback ultimately to offer better positioning, I think, for a bigger swing to the upside. The weekly open support's 32.74. I think Jamie's swing setup last night was also looking at some possibility for a play here. The 50% of last, this range is different now, guys, because the high obviously has been invalidated with a fresh high, but we're basically looking for sort of a drop that a basic 50 line, 25% line to get the recovery if this is going to hold this formation. At this point, for me, there's really no play for the long here. I still think you're risking a little bit of a washout, maybe a corrective pullback. You've been getting ongoing divergence on this 2-hour chart since last week, right? Price action with a higher high, higher high. There's a third reference point of divergence. So it's not there yet, the signal to try to fade it, but my standpoint, or at least what I'm looking for here, is at least near term, a little bit of a corrective stance or a pullback. I'll be really nimble if I do take anything on the short side. Ultimately, it's constructive, right? So the pullback would offer better positioning to get back on the long side. I want to see 34.37 on this. Last year's open, or excuse me, at this 2017 open at this point. And a longer term 618. Okay, is 34.37, 34.35 region. I just don't think it's got it in it, to go for a spike there. It's got to kind of wash out first. So on the lookout for some sort of corrective pullback in dollar CAD. Again, ultimately to get long, but for the near-term front, I think there is some juice here to get some pullback play. After a Friday stretch, it was just a rip, huge rip. And you're now talking about a stretch of what? Almost 2% off the low without any type of corrective pullback there. So maybe a stretch into 33.66 first. Again, this is last month's range high, so I'm looking for, it's a really good spot to see some possible failure. If we get back towards this region, look on a daily chart, where that crosshair follows up here, would be an area of which starts to look for some possible support, possible entries. But as it stands right now, it looks a little tired for me on dollar CAD. Questions on Loonie? Okay, next up. I guess let's just keep up with the setups from last night, and then we'll go into the previous update. But I do want to talk about gold real quick because it's got to be something that's in focus this week because of the move that we've recently seen. Kieran says, when you say constructive, you mean long short play is still on the table. Yes. So Kieran, constructive, by my definition, whenever I mean that, means bullish. Constructive means the trade is still in the long. Does that make sense? He says, okay. So while within this formation, this is a constructive or bullish formation. The broader trade is still constructive. Still, think about building blocks. We're literally constructing the advance. Yeah, some traders will use constructive as long as it's in a formation. I just don't see the rationale between something being constructive if it's moving lower. So maybe it's just my thought process, Kieran, but Isn't dollar CAD in a range on the 30 minute? Kieran says. No. So here's the rationale I would use. It's in a range on the weekly. I'm sorry. It's in a range on the daily chart. Okay. Basically, all of last month maintains the monthly opening range still. Okay. On the near-term charts, no. I would say on the near-term charts is where I get that constructive outlook, Kieran. Because if you take it from the low in February, it's been within the confines of a bullish formation. It's been respecting sort of that slope in the near term. Also, we've broken downslope resistance on Friday, right? So that channel broke to the upside, which automatically puts you in a near-term constructive sort of formation. So it depends on what magnitude or what time frame you're looking at. But we can still trade in constructive and descending channels within a daily range all month long. I'll do that, time and time again. I don't care. As long as there's clarity in the near-term price action. But good way to look at it, Kieran. Absolutely. The multi-time frame analysis, look, the broader picture is definitely still range bound. I don't think you would look at a 30-minute chart or even an hourly chart and look at this stretch here and think that this is in a range, right? This is definitely, it's simply not range bound. That's just a breakout, plain and simple. Make sense? Yes. All right, cool. And if you get really granular with it, Kieran, to kind of put some color. So you might ask yourself, well, Mike, so you're talking about dollar CAD, you're saying that we're coming into resistance, looks a little exhaustion, right? How would I look to play that? Well, this is where you need to get even more granular in price, guys. I try to, leave that kind of a bit up to you, but you look for something like this, could be a bear flag formation. What does that mean for me? Well, just look at some near-term lateral levels, that 30-minute, or let's bring it into an hourly. The hour high bar close would be right here. Near-term support would be right around here. Basic channel, right? Off Friday's high, found resistance. So I like this slope. Would give me somewhere like 33.25, 33.30. If that breaks to the downside, look for recovery to sell against that high. And you look to play a quick retracement down to a 38.2 weekly open, something like that. And again, it further highlights even that near-term slope we just highlighted further kind of brings to focus 33.66, which is that 50% target on the upside. Just a quick breakdown on how we would look to approach something like that. Also looking at this, even on this 30-minute chart, or the 60-minute chart rather, it looks like you're making an hourly outside reversal candle off the highs. Again, something like that followed by a break below 33.25, 33.30. For me, that would be sort of the suggestion, rather, the highlight, the risk that we could be seeing a near-term pullback there in dollar CAD. But good question, Kieran. All right, so that is Looney, number 3. So gold. We have to keep an eye on this week because it's absolutely paramount. Again, oh man, I can't believe I missed this last week, but what a huge move. I'll bring your attention really quick to the weekly charts. We've been covering gold like a hawk. You guys know where I stand on this one, and this is why we're at a big juncture, and I wanted to highlight this last night. Here's your weekly chart, okay? All I wanted to highlight here is that we're coming back into former slope resistance, now support. Keep that in focus. This is all we need to look at. The objective yearly opening range low comes in at 1276. Not Mike Boudreaux's opinion, not anything, just objective stuff, right? So 1276 is the level we need to watch. If we see a break below 1276 on a weekly close basis, that has massive implications for the broader rally we've been following from last August. And certainly would suggest that we have, the threat of a much larger correction would be in play on gold if that breaks. So weekly focus is for some sort of exhaustion into 1276 if this breakout is going to maintain its stance on the move higher. Kieran says, yes, I was looking at 1276. Right on, Kieran. Love it, right? It's objective stuff, man. And this is where our strength comes in analysis, because we take the subjective nature out of slope and all this these non-objective forms of analysis to something like this, right? So 1260, 1276, gotta watch that. If we break below that, it would suggest at least for a quarterly opening range break to the downside would certainly leave the risk for a larger correction into March. Okay, not our favorite scenario, but that's the risk. Daily chart looks like this. Again, highlighting that former slope resistance. We just looked at that on the weekly, right? Resistance into January, resistance into January, resistance, breach, acceleration. Here's your first test of support. Okay, now a couple of things to look at that further highlight 1276, 1275. A basic and objective 38.2 of the advance off the August low gets you 1275. The objective opening range low for January for the year, again, 1276. Just below that, you have this median line. Now, this is a formation that has broken, right? But on the break of the upper parallel, we saw acceleration. The upper parallel offered support, and the thrust or the rebound for the continuation of the upslope. Here's the breakdown of that parallel. The median line for that same slope comes in just below. So on an intraday basis, just keep that in mind. If we slip below 1275, don't just go jumping in a short because Geronimo. You still could get that fake out towards that parallel before the close. Bottom line, these are levels to look for exhaustion if we break lower from here. But objectively, like right now, today, you're checking slope, former slope resistance, now support. Okay, and you're on the back of a 5-day consecutive decline. When's the last time we saw something like that? Well, let's take a look. Five-day consecutive decline. Last time was back here. You had that one doji, which basically still counted as a down day, but that completed 7 days down before obviously a major low and a rebound. What about something coming off of some major highs? Nope. Here's a high. Nope. Yeah, just a 2-day sort of standstill there. A little bit of a bump up before resumption. So just a look back at the last couple of times we've seen 5-day corrections or 5-day pullbacks or more doesn't really give us much of a indication, right, that we should be necessarily looking to fade the move, but something to look at nonetheless. So long story short, if you're holding shorts, a good area to take a little off the table. It's still bearish below this slope, essentially the opening range highs for the week. Again, 1275, 1276, major key support. Near term bearish in validation, a breach above 1302 on a closed basis, that would put me back on the long side. Monthly open resistance is 113.13. It's 13.13. That's where we opened the calendar month for March. All right. The threat's real. Okay, the threat's real. If we break 1276, and again, looking at this on the daily chart, we noticed and we talked about the fact that we were making that divergence. And just a quick lesson in divergence. Really, 3 months in the making. And all 3 reference points above 70, why you want to rely less on those as a timing tool, but certainly suggests that the exhaustion trade that we were looking for, well, it's here. So Pooja saying, XAU USD, remember that trend line off the all-time highs in 2011, 2012? A parallel from the April 2018 high is also just below 1276 area. Okay, Pooja, what time frame are you looking at with that chart? Remember that trend line off the all-time highs from 2011. A parallel from the April 2018 high. So you're doing this. So I have that down near like 1260s, and that actually would converge on the longer running, this is the 200 week, or excuse me, 52 week moving yearly average. I see what you're looking at. I do like the fact that that slope pivot did see a break, right? Did see an acceleration. Something to take note of, sure, Pooja. But for me, it's all about this move here. Sorry, say that again to go long. Gold, when does it become bearish invalidation? So bearish invalidation for me in gold if we close a daily close above 1302 again. Right? Why? Why is that level, Kieran? Does that make sense to you? If we breach above this level, there's a couple of different things. First of all, again, take a look back. Look at my crosshair to the left. Such a major inflection in price. Objective stuff, right? Swing highs, break acceleration, swing lows, break acceleration, resistance, resistance. We get through that again. Last year's open, 1302, back on the constructive side. Add to that former channel support. Again, for the upslope that we were in, resistance, resistance, resistance. There's the break. We saw the accelerated drop. If this rebound fails there, then you're looking for resumption. If it breaks back above slope or channel support, well, this could be discounted as a false break scenario. And again, that would shift the focus higher. Make sense, Kieran? Kind of a choke point. And don't forget, that was the opening range low for last month. And it was straight up support. Don't take my word for anything. Look at price. He says, thank you. And more than welcome. Good questions. Okay, so I'm looking for a near-term support, kind of a bounce off this area here. I don't think you're going to get the resumption. I still do think the risk is for a drop lower. 1276 really feels like it's kind of begging for a test. But again, on the back of this decline into the start of the week or into the early portion of the week, let's call it, keep that in mind. Here's the near-term picture, okay? And this is what I highlighted yesterday. And the interesting thing was the addition of this near-term slope. Okay, so daily chart unchanged there, nothing to move. Here's the intraday chart. The interesting thing was the addition of this near-term slope. Look, I don't know if this is in play, but what looked appealing to me yesterday on the analysis or drop of this slope was the fact that that 50 line, offered basically resistance on the downslope. The pivot below the median line did see acceleration. And point in fact, the weekly opening range pivoted right off the lower parallel. So for me, it's definitely worth taking a look. Keeps the focus lower below 1293. That's the weekly open, 1292.97. Also converges right on that median line. And as I said earlier, you saw some nice inflection and the break saw acceleration below the median line. So if it's going to fail, this would be an area to look for that last stab into 1276, 1275. If we make it through this, you could still see a rally towards 1303, and it would still be within the confines of this downtrend. So Kieran, you're asking me why 1302, 1303 was sort of my bearish invalidation level. It's further highlighted here on the intraday charts, right? Because a break above that objectively would take us out of this descending formation. And that would shift the focus again for a larger recovery back towards the monthly open. So the formation looks pretty good. How do you play this from here? Again, for me, it's either a drop into 1279, 1276. Look for exhaustion, possible entries there. If the rally fails and we get a near-term trigger up here, that would be a decent short against the highs for the week for that last stab lower. Above 1293, I don't even want to touch it. I'd look to see what kind of reaction we get near 1302, 1303 on the recovery. But yeah, the intraday levels are actually pretty clean. I don't typically like to work too aggressively with these really sharp descending slopes, guys. They just don't tend to work and last that long. But the parallels are just highlighting levels that we're already focused on, namely the weekly open, the 2018 open, and this year's open / that pivot down at 1276. Any questions on gold? Okay, last but not least from last night's update, I just wanted to cover SPX. Pete, are you in the room? I see you there. Both Pete's are here. All right. Here's the SPX. I thought it was worth it to highlight this chart on the back of yesterday's outside day reversal. off Fibonacci resistance, saw former swing highs from last year, specifically in October, November, and even the December high, all in this pivot zone. You can see what we did yesterday. Now, it's way too early, but like a weekly chart, I just wanted to highlight, guys, that as it stands right now, you usually want to look at this on a log scale on the weekly chart. As it stands right now, okay, price has already covered last week's range. Okay, so if we start to settle lower, specifically the end of this week into the close of the session, man, an outside weekly reversal off of Fibonacci resistance, off those former swing highs from October, November, and December, that would be near-term exhaustion. It would scream exhaustion on the weekly charts. Also note momentum ahead of 60. So these things we tend to look at in the momentum oscillator. In bearish trends, you tend to find failure ahead of 60. In bullish trends, you tend to find support ahead of 40. Okay, so you see a change in behavior ever since that 70 break. This was the first break that we got below 40. And ever since that first break below 40, this is the first test, we're turning ahead of 60. So a change in the momentum profile, behavioral change in the oscillator. Something to take note of, right? And certainly points lower. Or it suggests the risk for exhaustion, okay? Looking at this on the daily chart, again, there it is. Nice little ascending channel formation. You're at Fibonacci resistance. You made an outside daily reversal off resistance yesterday. And certainly, again, on the daily chart, you are seeing continued momentum divergence. Again, bring it into a line chart to make it easier to identify. Higher high in price, higher high in price, higher high in price. Series of subtle lower highs in the momentum oscillator. Again, these tend to be decent triggers, tend to be decent indicators to foreshadow, exhaustion in price. Okay, intraday. Here's what the chart looked like. And again, this was just a formation that we kind of threw together last night. I wanted to highlight what we were looking at. The previous update on this looked like this. We were talking about price really kind of consolidating into this momentum or into this resistance barrier. That resistance barrier was 28.07 into 28.10. We talked about that at length since the start of February trade, really. And here was the first test right here on the 25th of February. We pulled right back. Near-term support 27.78, that's still key resistance. We went for another test into the close of last week, failed again, and here is the breakdown. Okay, so a look at this from last night. Here's the pitchfork that we added. It's too early to rely on this, or as of last night it was, too aggressively. But why do we put these pitchforks, especially when the slope we're just adding, guys, is highlighted by levels, just like we did in gold, that we're already watching? So look, the upper parallel converges on 28.10, 28.07. It's a level we're already watching, right? The lower 50 line or the 25% line converges on the objective weekly opening range low. Stop traffic, that converges on the objective slope support or parallel support that we've been following. So when these things all line up, guys, confluence regions is further validation just to work with that slope until we get a reason to remove it or a reason to keep looking at it. So just a quick side note, by the way, if you're in the New York region, guys, we'll be presenting at the New York Traders Expo on Monday next week. So there won't be a webinar on daily effects, but you can catch me in live time. So if you're in the area, would love to meet and greet, get to put a face to some of you guys. So a quick note there, but what we'll be discussing is confluence regions, and really Fibonacci is great, slope is great, moving averages are great, high day, low day closes are great, but guess what? When they converge and you're looking at areas of confluence where those levels all meet up and highlight a specific zone, those become critical, right? And can oftentimes be our best plays. So 28.10, still bearish invalidation. Last week's low, or the low that we made this week, start of the week, basically 27.67. That's near-term support. 2750 is what would validate that a more significant high was put in place. And if we see a break below that 200-day moving average, the lower parallel, man, downside break of a descending channel, that would certainly open up a massive decline, I think, if it were to happen. First things first, we're looking for exhaustion ahead of 2810, 2807 for a move back towards that basic parallel support from last week, or from last month, or from the year. It's from January. Questions on SPX? I don't typically follow these too closely, guys, and you'll often see I don't really put too many equity charts as far as the intraday chart setups are concerned. But man, when the levels are there and it's that clean, it's foolish not to take a look at. Sorry about that, guys. Anyway, moving right along. SPX, that was number 5. Kieran says, I wish you would put more equity analysis on SB. Kieran, we're always open for a suggestion, guys, and your feedback is always critical to us. So feel free to let us know. Kieran, is there a specific indice that you're looking at? If you're talking about if you're talking about single share, yeah, that's going to be a hard ask, because again, when we're talking about single share, the fundamentals really are a lot more critical. Dow, NASDAQ, and DAX. So typically, Jamie covers the US indices pretty close, Kieran. So if you're talking about intraday analysis, when the setups are there, do let me know if there's something you're looking at. I'll be more than happy to show you what I've got, but I don't typically get too involved with intraday on the Dow or the NASDAQ for that matter. But when conditions warrant, for sure. He's talking about, yes, intraday. Okay, so you're talking about more specifically intraday. Yeah, I don't really scalp them as much or get too involved on intraday affairs with the equity indices, but when the setups are there, I'll be sure to bring them up for you for sure, Kieran. Number 6, let's jump into the previous update, and that is Euro from last week. So here's what Euro looks like now. The 113 barrier, man, I'm sick of talking about it. You guys let me know if there's anything specific. It's still the region to watch, right? We talked about the fact that 113 has been the level of support that's the only level you need to focus on. Here's the weekly chart for Euro. We have not closed sub 113 at all since the break above back in 2017. So despite all the downside moves, despite all the drops, despite the intra-week collapses into 1220s and such, we've never closed a week below 113, something to keep in note. Daily chart looks like this. What looked to me like a near-term trigger break to the upside on that move last week. Looks like it failed. You put in a doji on that 618 test at 114. Here's the pullback. Again, I'm not looking for resumption. I'm not looking to short into 113. So, Euro for me is on the sideway right now. I do not want to get involved too aggressively on this in either direction. Here's what we're looking at the intraday chart, and this is kind of the only thing I'm focused on. If we settle 113 support, we're looking for exhaustion on another stretch. Wait a minute, Mike, you just talked about 113 on the weekly charts. You just talked about 113 on the daily charts. Well, here's 113 on the intraday charts. It happens to be the 618 of the February rally. It happens to be the 1618 of the decline from last month's high. It happens to be the December low day close. It's all right there, right at 113 again, right? Again. So, look for an exhaustion drop into that region once more. If we close sub 113, obviously that changes things. For me, that's pretty much the only thing I'm looking for, guys. Weekly open resistance is what would put me back on the long side. So if we get through 113.80s, so let me move this level to weekly open resistance. Okay. That's what would put me back on the bullish track for euro. All things held constant, I'm still looking for some sort of washout, some sort of exhaustion drop near 113 before you start to get involved in this thing again. And ideally, if we get that, like some sort of washout, we get some sort of slope or formation or pitchfork off the lows to give us guidance. Not really too keen on like working aggressively with this anymore. So I do want a new low to register to give me some sort of reference point for a new formation. Does that make sense, guys, on euro? It's all about 113, man. It's been the same game. I'm like a broken record on this thing for months, but it's worked, you know, on approaches into 113. If you've tried to fade this thing, you tried to look for long exposure, you tried to look for the reversal, that's been the play the last couple of months on every test into 113. Here's the test. Here's the test. Here's the test. A little bit deeper on the cut into the February close, March open, but 113, it's all about that level. All right, and some basic slope here, you know, just some basic new slope off the high. If you take that to these former swing lows, again, looks like could allot for maybe an intraday swing even deeper, but you're basically looking for that exhaustion in and around the 113 handle. Okay, that's number 6. Any questions on euro? I'm gonna pick up the pace here a little bit. Next one is Aussie. Oh, please let's not look at euro, says Kieran. I'm taking that as sarcasm. So from the previous update, guys, a little bit of an update to the levels. The only thing I've added here is just that 100% extension, which was a decent pivot in price, and the 1618 further highlights the 113 level. So you're basically just looking at the same levels here from the previous Thursday update, or I guess this was Wednesday. Also, Aussie, we highlighted that last week as well. Here's what it looked like. We were working with a constructive outlook while above 71.15, 71.10, confluence region of the low week close, 618 retracement, and the pitchfork support. Well, we broke below it. And not only did we break below it, but we came back, we checked it as resistance last week, and that further validated the fact that Aussie had reversed course. 70, 70, 70, 71, we talked about this region as a big level. And again, the lower levels in Aussie are still sort of in play. Here's what Aussie looks like now. We broke that lower channel. We tested it as resistance on Friday. We gapped into it into the weekly open and continued to hold it as resistance. You know, I'm working bearish sub 71.27 at this point. Downside break, 77, like I said, hit already. Next downside level, 70.42. That's this year's open. Objective stuff. That would be the first target on a downside move here in Aussie. So I'm willing to remove this slope now. I just kind of want to leave this on here for the webinar to show you the break, retest, and sort of keeps the focus lower, sub 70.27. Again, 70.70. There's no really change to any of the levels. You're looking for a break here to look for a move on 2019 open, and that's 70.42. We got the RBA interest rate decision last night. No change as far as that's concerned. We got a 1.5% clip hold there. We saw a little intraday volatility, but we're still essentially holding the weekly opening range. We gapped higher into the open of the week. We filled the Friday gap. We filled that move, and now just look for a break of this range for guidance. Again, favorite scenarios shorter below 71.27 for a move on 70.42. I'd watch out. What's the word I want to use? I want to be very cautious. Let's just say that on a drop into this region, guys. Just because of the nature of the decline, you could see a little bit of an exhaustion sort of reversal off that region, but the focus is for a drop into yearly open support. All right, that is Aussie. Last but not least from the updates, I want to go over sterling, and then we'll jump into your questions here. Last 10 minutes of the session. Here's British pound. Man, I love where we turned from. So last update on sterling looked like this. And we were coming off of, we were looking for, this was back on the 26th, we were looking for exhaustion on a stretch into 133. 133.60 was the region of which we were looking, all right, this thing could get pretty tired up here. Near term, you had upslope resistance there. If you go to the previous charts, you know that on the daily chart, we were highlighting The December low at 133. That was a really nice stretch that we made back in September of last year. Also, the upslope that we've been following, a parallel converged right on that region. Well, here's what price action did, right? We stretched right into it. We made an intraday stretch higher, sure, but we essentially closed right there, just a few pips above 133. And that's where we found ourselves on that previous update. We were saying, look, 133 is on tap. Look for exhaustion into this region. If this thing's going to turn, or if it's going to get a kickback or a pullback, it's a great spot just because of where we are, like I said, on the daily charts. And even, on a weekly standpoint, here's the Sterling weekly, a really decent pivot at that December low, right? So, long story short, here's the rebound, right? Really nice hold there. We pulled back. The intraday chart, we were looking at this upslope for that channel series that we were following off of the February lows. Here's the exhaustion above 133 and pullback. There's the break, 131.80. That was near-term upslope support, near-term bullish inval, looking lower. Okay, and last night, well, I didn't give you an update on this last night, but the focus was, excuse me, on a drop back into February open support. That's 3107. We're checking that right now. All right, so if you're holding short exposure, 3107 is the level where you want to wrap up most of that position. February open support is right there. You also have a parallel. This is just the parallel resistance of the slope from the high here into that low. You can see that it basically converged right there. So you could get a little bit of a recovery here. Bearish invalidation, I want to keep at 3220s, 3225. Okay, this confluence here of slope. That's the only thing that would put me back on the constructive standpoint. Next downside target, an area of which would be a little bit more critical as support, I think if you get the drop into 3060s, look again to the left, decent pivot in price, objectively speaking. I'd be looking for a divergent signal into that drop, maybe an exhaustion for possible entries on the long side. The bigger picture is still bullish for me in Sterling, guys, but on the context of where we turned from, how we turned, what this thing is doing in momentum, yeah, sure. I think the risk for a larger washout to the downside is definitely there. Ultimately, want to buy that drop. Okay. Broader bullish inval, the only thing that would turn me like bear Sterling moving forward on like a longer term prospect would be a break below 129.90s, basically 130. 200-day moving average. You got the 50 line slope there that would invalidate the slope breakout we made last month. It would invalidate a whole bunch of stuff. So it's my thought process for Sterling moving forward. Any questions on that? Intraday targets look pretty clean. No change to any levels aside from the basic new fib retracement of the decline, of the ascent rather, excuse me. So the rally that we made, just take a quick fib and add that on, and that's where this 50% at 130.60 comes into play. All right, let's jump into your question. I'm gonna go out of order just because I see your question there, Christopher, on Sterling Oz. Since we just covered Sterling and we just covered Aussie, let's take a look at Sterling Oz for you. That's number 9. All right, let's see what you're looking at here. Ooh, oh, so right off the bat, I haven't looked at this in obviously a few weeks. Man, 86.88 into 87.19. That was level we obviously had highlighted as a major critical resistance. One of my favorite plays in confluence regions. This is the 618 retracement of the entire decline from the 2016 highs. Also, the 2018 highs. Also, the 100% extension from the advance off that December low. It's from 2018. Both of those converged at 186.88, 187.20. Look where this thing turned from. So major resistance right off the bat there, Christopher, as momentum turned from 70. Pretty big, pretty big. So let me do this. Just bear with me one sec. Let me just clean up these levels. Let's see what this looks like. pretty, I think, pretty sharp support trigger there and momentum to keep your eye on. All right. Kind of addressed that a little bit, got an idea. The basic takeaway here is just this major area of resistance. I really can't highlight this enough, specifically because it's also last year's high. So not only do you have the fib confluence, but you also have last year's stretch highs right there anyway. So a level to watch. Also, just in case that wasn't enough, remember this formation, guys? We haven't really focused on it as much since we broke, but the pivots have been insane. Okay, even the highs that we made were right off that same slope. So the pivots have been very clear, and here's that former slope support, resistance, resistance again. So let's see what the near-term picture looks like. Yeah, I won't forget crude, Mark, I got you. I'd have to rework the levels here for you to get you something on the near term. This is for Christopher Whitney. I will. This looks super interesting. On whole, if you put just a quick gunshot approach on it, you're bearish below the weekly open near term. If this is true, if this is a legit reversal, weekly open resistance needs to hold. Next downside target, 84.60. Okay, looks decent. It looks decent. Again, I don't know about the merits of this slope just yet, but even if we were to take a more kind of just objective stance on price, you know what I mean? Lower parallel for that resistance. Just a real near term off like this weekly high. Further highlights kind of a deeper drop near 84.60s, 84.70s, this region. Former swing highs, slope support. Okay. So we'll revisit this again on Thursday on the next webinar, but I hope that helps. Christopher for pound Aussie, it's number 9. Oil 10 for Mark and Pete. Here's crude. Man, this thing, if it's gonna be a breakout, 57.14 is the level I need to see, invalidated on a daily close basis today. Okay, today. Couple of things I'm looking at there. Here's the daily chart. Y'all have seen this before. I think my last update on the intraday page for crude was right here, right on the 25th. Here's the chart look like on the pullback, right? 54.50 was kind of the level that we were focused on as support. Didn't even get there. The low is 54.55, all right? So it turned right ahead of that 54.50 level. Here's the reversal. I don't know if this is legit or not, guys, but like I said, the high day close, 57.14 was the level that we were looking for. There was a high day close from February as resistance. Here's what it looks like on the daily chart, right? The reason I focus on that level right now is because it also highlights median line resistance, and this is the pitchfork we've been following off of last year's highs. And so where we reversed off of, we made the outside day reversal on the 1st of the month. That's where the monthly open resistance is as well. By the way, monthly open resistance 57.24. So 57.24, 57.14, that's resistance at this point. One other thing I want to note on this is on the daily chart, the monthly opening range thus far is defined by the March 1st range. So literally the entire opening range is defined by that one singular stretch on that outside reversal day. Just pours gas on the conviction, right? More fuel for the fire. If we break to the top side, you're looking for resumption. You're looking for a 60.06 clip. If you break the downside of 55.50, unfortunately, there is a larger risk for a larger correction towards 53.80s is where I'd expect to see a larger support bounce. But all things held constant, man, it's all about this break right here. Really, really, really important. Okay, so watch today's close, watch this reaction, 57.14, remember 57.21, monthly open resistance, watch for a close above that. That's what we need to get the validation for the breakout. All right, huge level of resistance here, guys. Don't get caught, wait for the conviction, okay, on crude. So Pete, hope that helps. Dollar yen, this 11, we're over on time, but let me get a quick reference, guys, here. Dollar yen. Abomination looks like this. I really don't have anything on this, guys, to be quite frank with you. I haven't even updated the chart since I lost that daily setup, but man, the only thing I'm looking at is slope resistance, channel resistance. That's based off these two reference points, believe it or not. A parallel caught the highs, caught the stretch in February. You know, what the heck do you do with this? I don't know. If we take a more objective approach to the retracement from the decline off the highs you made in October, as opposed to the high that you made back in December, you know, there's room. Either way, you've invalidated the 618. What am I looking for here? Oh, I want to see what 764 looks like. Yeah. You know, I don't really have nothing to say on this, Pete, to be quite frank with you guys. For dollar yen, a pistol to my head, I'd say look for exhaustion ahead of 112, right? But I said that like last week as well. You might have gotten a decent short play, but we're still stuck up here. So trade at your own risk. I really do not have any clarity of thought as far as a bias is concerned here. The only thing I'm looking at is the daily chart. Here's dollar yen on the weekly, by the way. Right, so the 200 long week moving average, 2018 open, gives you like 112.19 into 112.50s. But man, this is just ugly, just ugly. So I hope, take that for what it's worth. Ty wanted to look at euro yen, so that'll be number 12. Ty, here's what euro yen looks like. Let's see. Resistance, man. Remember 127.65, 127.63. We talked about that last week. Actually, I think you asked about this. So that was the 2018 low week close, a mouthful for May. And it was also the 618 retracement for this recent decline from the September highs of last year. You had the 200 long week moving average up there. You had slope or parallel resistance right there as well. Here's the pullback. Let's see what it looks like euro yen on the daily chart. Decent slope resistance there as well. Reversal candle that we made yesterday. Huh. Looks like an exhaustion trade to me. I'd be looking to fade strength. Essentially, well, this is labeled wrong. Below the weekly open, but right below the weekly open even is the high day close for the year thus far. It's 27.18. If I bring this here, it's just below the weekly open, which is right here, 27.30. So yeah, 13 pip range, right? Whatever, 12 pip range of resistance. That would be bearish invalidation for me. Again, I'm looking for a near-term correction, not necessarily a reversal on this one, Ty, but if you put a pistol to my head, I would say you're coming to a pretty decent area of resistance. You know, could be sort of a false break type of pop, pullback. And if I take a retracement just of this last stretch right here, So do this. Watch this region. Here's your sort of reversal play. All right, Ty, take an eye on that. 26, 25, 26, 35, that 10 pip zone. If you get below that, that would be the sort of hallmark for a near-term reversal play. It would also, the reason I'm looking at that reason, it would also necessitate a break below this. You see this? So the median line was a decent pivot, but that parallel is caught a high. So you caught a high here, you caught a high here. If this is a real high catch, if we break back below this pivot zone, that would be sort of the onset for a larger correction to the downside. So Ty, we'll revisit this again on Tuesday. Feel free to bring it back up. But that's sort of a quick gunshot approach of what I'd be looking at. All right, guys. Christopher says thank you. Appreciate it. Pete says thank you. Welcome to all of you guys. Always a pleasure. I will see you on Wednesday, on Thursday rather. Same time, same channel. Till then, best of luck trading, guys. Cheers.